Good morning, guys. How are we all doing? I am Dan from Trading with Dan. This is our Bitcoin morning update. It's a pretty big day today for two reasons. One is obviously that we've got the Fed coming out with something later on, and secondly because we do have markets, a lot of markets are at pretty important levels, so they're quite precariously placed. So that is obviously going to tie in with obviously whatever the Fed decides to do to markets later on. So yeah, pretty important day today. So it will be lots of fun. I am sure. But yeah, that all being said, we shall go straight over to those Bitcoin 4-hour charts. Yeah, where you see what I'm talking about. We literally just flirting with this support area, obviously looking like it could break down from here after what would be a bit of a fake out above obviously our previous lower highs, but obviously the flip side is that we could be turning this around. But obviously whenever we are nearer the support, it's clearly more likely that the support is going to break than obviously us break through the upper levels of resistance just by the fact it's further away. So yeah, we have got that to watch out. If we do also go over to stocks, these are the S&P futures. You can see they are an important level that they need to hold. They need to hold this level to put in basically a higher low relative to this low, and then obviously gun for higher highs above these highs. But obviously if we lose this, it will then look like we will have a good shot of obviously coming down to this support area, and then on the second attempt, yeah, potentially having a good shot of breaking it. So you can see stock markets precariously placed, which are to a certain extent dragging Bitcoin markets around as well. So yeah, I mean, let's see what the Fed comes out and decides to do, but they are no doubt looking at these things thinking we could definitely cause some serious pain if we say something the market doesn't like. 10-year yield is easing off, and I would say obviously that's good. It kind of is good, obviously, in a way that the rate isn't higher, but this is easing off obviously in sympathy with a risk-off trade, and obviously a risk-off trade is not good if people are worried about taking risks. So 10-year is easing off, but not potentially for the right reasons. So it's basically not easing off on the back of inflation fears waning and basically lower inflation fears. It's easing off on literally a safe haven play, which you can also see in the dollar index. Basically established itself now fully and formally back in its previous range. So I would potentially, obviously notwithstanding the Fed doing something wild that causes it either move up or break down, I would kind of expect we are just going to trade sideways within here for a bit, much in the same way we did here. It's kind of like, this is textbook. This is low vol leads to high vol, then obviously leads back through to low vol, and then we'll just trade sideways again. That's kind of what we could expect here, obviously notwithstanding the Fed coming out with some market moving statements or actions or policies or what have you. Oil still up there or thereabouts. I keep seeing it is the most reliable source of information. It probably is one of the least reliable sources, but I keep seeing popping up on my Facebook various news articles about masses of troops and just general scaremongering. I do feel, I think I spoke in a previous video, that we are approaching what is probably max FUD level for these markets, with obviously the Fed and the Ukraine. I mean, these are pretty unsettling, what is even the word? Uncertain times. The market hates uncertainty. Yeah, I feel like it can't get too much more uncertain. Therefore, obviously, everything is about the second derivative, the rate of change. If the rate of change of uncertainty is slowing, and then we obviously could be entering a period of more calm. So yeah, we'll see what happens there. Gold, as we can see, obviously again, like we spoke about in Friday's video, it's just or Saturday's video, it's just a risk off here. It's a safe haven. Gold acting as a safe haven here. as it should. Okay, on occasion. So yeah, not too much to look at. We are just looking at important levels. Ethereum, if you can see the risk off as well here. If we need to see it anywhere else, we can see it here in the Ethereum Satoshi pairing. It is also at an important level. It kind of needs to hold here. Otherwise, we'll be looking at visiting this low and potentially taking it out. If we can hold here, then obviously we can print a nice higher low relative to here, and then we'll look at take out these highs, and then obviously then change this downtrend that we've had for a while. The Ethereum USD pairing, as you can see, again at an important support level, testing a support level. So obviously if we break this, then we'll be back in this range, potentially testing these lows. So yeah, like I keep saying, we've got a market driving event today, and then we've got markets basically on their arse. Sat at levels where they are just basically waiting for the trapdoors to potentially open. So let's see what the Fed decides to do. See if it wants to play games, or see if it wants to like play ball. But yeah, we shall see. Interesting times. We will finally have a look at stochastics. See how they are doing in the face of this. Yeah, so support from the 4 hour, which is obviously good. 10 hour potentially going to turn up from a low level, but hasn't done yet. 12 hour diving pretty deep. So all I will say is that eventually it can turn back up and give us a bit of support. So that may be what we're waiting for a decent bounce. Is these 10 and 12 hour to get moving to the upside. Obviously daily got so much room to run to the downside, but probably counteract that with buy daily. That's not looking too bad, and then obviously 3-day and 5-day looking good. Weekly turn back up here as well, and also bi-weekly and monthly down, but I would say that you can kind of see this bit of a kink in the bi-weekly, so losing obviously a bit of that downward momentum. So realistically speaking, if all things being equal, if it wasn't for the Fed, you would expect we've got a good chance to hold these support levels and move up. But yeah, we'll have to see what the Fed says and does first. Like I said, I think they are either going to raise rates now, which may or may not do much for their credibility, and then raise them on March the 16th, or communicate the fact they're going to raise them 50 basis points on March the 16th, so that the market isn't as shocked by it. Maybe that is why they're doing it. But either way, in my opinion, come March the 16th, we are going to have obviously those two rate raises in the bag, and then we'll just see how markets digest that. How inflation numbers are. Well, they weren't, obviously it's a lagging indicator, like the data that we get was from the month prior. But again, remember what I said about the sine curve, the rate of change, the second derivative. That's what it's all about. It is going to be difficult for inflation to keep accelerating at these, basically keep going up at these accelerated levels. It will have to slow, and that's when obviously then you price in, when the market will then price in obviously more good things, i.e. monetary stimulus from the Fed. So yeah, there we go, guys. Happy Monday, everybody. Welcome to the new trading week. I am Dan from Trading with Dan. Thanks for listening. Remember, this is not financial advice. I'm not a financial advisor. Always do your own research, and I shall speak to you guys soon.